Hi everyone. Our second lesson on income statement, in fact the second part of income statement. We covered the first part called trading account in the last session, and we will build up on that. I have intentionally left those slides as part of this presentation also, so you would see what we covered in the last session briefly, and then we'll move on to the second part of income statement. So let's carry on with it. You can read that yourself because we have already read it. Just a brief description. The purpose of income statement is to find the profit or loss, and this is done in two steps. One step you have already seen, where we calculated the gross profit or the gross loss, and the next step would be the calculation of the overall profit or loss. The idea of the profit again is earnings minus the spendings, and both earnings and spendings should be from your ongoing operations. So let's carry on. Quick review. For the trading account, you find the revenue first, which is your earning, sales minus sales returns, and then cost of goods sold with this formula. Then we minus the two and we find the gross profit or loss. This is what we covered in the last session, and we also showed you how to prepare a trading account. The second bullet point, number 2, this is the name of the second part of the income statement. So the second part of income statement is called profit and loss account. Like the first one was called the trading account, and the second one is called profit and loss account. This part of the income statement starts with what the previous part finished with. If you remember, the trading account finishes with the calculation of gross profit or gross loss. So we are assuming here that the business made a gross profit. This gross profit is carried forward to the profit and loss account, right? And then any other incomes which is incomes beside your sales. So if the business has any other incomes which are not from the sale of goods, they are added to the gross profit, and we'll make a notation beside other incomes. We can circle the other incomes. So we'll circle the other incomes and we'll make a brief list on the side. This could include your incomes from sources other than sales. So income from sources other than sales. And those sources could be, we will see when we move on, they could be your discount received or the commission received or rent received, etc. In many questions, other incomes are not given, so you can just take the gross profit here. And once you have the gross profit, then you list all your expenses. In the next step, you list all your expenses, and these expenses are the expenses other than cost of goods sold. So we'll make a notation on the side, expenses other than cost of goods sold, because the cost of goods sold has already been taken in the trading account, subtracted from the revenue to give the gross profit. So these expenses will include your overheads like rent, insurance, salaries and wages, etc. And once you have listed the gross profit and incomes and expenses, then you will minus the expenses from the gross profit and other incomes, and you would get your profit or loss. So let's put a bracket around loss, because the loss would be a negative number, or we can circle the loss and we can just write on the side negative. So if your answer is a negative number, it's the loss. So if when you minus the D from C, if you get a negative number, that will be your loss. So this is what the second part of income statement shows. So let's carry on. Alright, so this is the trading account. You have already seen it, so we will not discuss it. Let's carry on to the next one. That too you have already seen. This is the layout we used. So trading account is done. And then once you have done the trading account, then you are ready to do your profit and loss account. Now this is again a T account layout, which is just for the purpose of explaining the double entry. So we finished the trading account with the gross profit, and we showed there as gross profit CD. Now we will show here as gross profit BD. So this is actually brought down from the trading account. And then we will add any other incomes. Here I've taken an example of one other income, discount received. There can be more other incomes if there are, and you can add them to the gross profit, and we can get the total on the credit side. Now from this total we will minus the expenses on the other side, so we'll list all our expenses. Now these expenses end up here when you close your expenses account by crediting the expenses in the general ledger. You know, expenses have debit balances, so when those balances are transferred from the expenses account to the profit and loss account here, they will end up on the debit side of the profit and loss account, and the double entry would be debit the profit and loss account, which is in front of you here, and credit the expenses account individually. So those expenses accounts, they'll be moved here one by one. So you can see the list here. This is again example list. There can be any expenses. Here you have rent, salaries, electricity, and carriage outward. Carriage outward might be a new expense, which is to be linked to carriage inward, which we saw earlier. So carriage inward was the shipping on purchases, and this is the shipping on sales. So if as a seller, if you are paying the carriage, you would include it as your expense because buyer is not paying it. If the buyer pays it, then he would record it as his carriage inward, you know. And once you have listed all the expenses, you will balance this account, and the balance of this account will be either the profit for the year as shown here, or it could even be the loss for the year. If it was loss, it would have been shown on the other side, which is the credit side. So this is how we do profit and loss account in T account layout. Again, you are not supposed to do it in T account layout. So we'll move on to the next slide and show you the one which we will use. So this is the vertical layout we're going to use. So if you see the first part of this vertical statement layout of profit and loss account, it begins with the gross profit which we found in the trading account. Then we add any other incomes. Here again I've taken one example of another income, and then I've added it to the gross profit to get the total of gross profit and other incomes. And then I have given a heading of expenses. So next one is the heading of expenses, and then we list the expenses in any order, and then we add up the expenses and get their total in the second column, and then the two numbers in the second column, they are subtracted, and you get a positive or a negative number. If it's a positive number, it's profit, and if it is a negative number, then it's a loss. So you would have a profit or loss for the year here, and that finishes the second part of income statement. So that's your final profit, which can also be called as a net profit. So we'll just make a notation on the side. In some books and in the older versions of the past papers, you will call it the net profit or net loss. So this is your net profit. Again, we'll not use this terminology because this is old terminology, but just to give you a hint here that in case you come across these terms, they have the same meaning. So this is your net profit or net loss, but we would use the description profit/loss for the year. So let's carry on. Now what you see here is, it's just the combination of the two statements that we have already, or the rather two parts of the income statement we studied individually. Now we have just stacked them, just one on the top of other, you know. So if you see the first big yellow box here, this big yellow box is the first part of the income statement, which is the trading account. And then the purple box, the big purple box there, is the second part of the income statement, which is your profit and loss account. And this has a common figure in there, which is in green. So this is the common figure, the gross profit. So this gross profit is common to both parts of the income statement. In other words, the first part, which is the trading account, finishes with gross profit, and the second part, which is profit and loss account, it begins with the gross profit. So we have just stacked both parts on top of each other to make it a complete income statement. And then the heading would be just income statement. You would not write the words trading account or profit and loss account with it. So if just a quick summary starts with sales. we minus the sales returns, and then we get the net sales, then we get the cost of goods sold using this big formula here. There can be some variation in this cost of goods sold formula. In some past papers or books, you may find another inner column added, which could be for the net purchases. Remember, we calculated net purchases separately also. So if the net purchases calculation is shown separately, then it can be shown in the innermost column, and a new column can be added. And then in the second column, you would just have the opening inventory, and you will substitute the other numbers, purchases, purchases returns, carriage inwards, and goods drawings, with just one number, which would be the net purchases number, and then you would subtract the closing inventory. Again, it's an option, and you may come across it sometimes, you know. Once you have found the gross profit, then you add any other incomes, which is discount received in this case, then list all your expenses, add all the expenses up in the first column, put the total in the second column, and then minus this from the number above and get the positive or the negative number, which is your profit or loss for the year. So this does the income statement for a trading business. The next thing is again another income statement. Now this income statement is for a service business. So let's highlight service business. It is income statement, but not for a trading business, but for a service business. A service business, you know, they don't deal with buying and selling goods. They just provide a service, like an accountant or a lawyer or a secretary. The example is your school. The school provides you the service and you pay a fee for it. If you just ignore the books the school sells or the food in the canteen the business sells, then school is only a service business. They provide education, you know, and you pay for it. So a school will be an example of a service business, and when they do their income statement, they don't have to do a trading account because they do not trade, so they are a service business. So this is a relatively easier income statement, so you don't have to calculate the profit in 2 steps, you can just do it in 1 step. So let's review it. In this case, you will just give first heading as incomes, and you will make a list of all the incomes you have by providing services. So here I've taken 2 examples of the incomes, the fee received and the commission received. So this is in return of the services you provide to your customers. You list them in the inner column and you shift the total in the outer column, and then you just list all your expenses together. You don't have to worry about cost of goods sold because you don't have any cost of goods sold. So you just list all your expenses in the first column, the total in the second column, and then you subtract the 2 numbers in the second column, and you get a positive or a negative number, which would give you your profit or loss for the year. So this is the income statement of a service business. I'll take you briefly to the previous slide just to compare it with the income statement of a trading business. You notice here we have made it into 2 sections actually, or 2 parts, and the one part is the trading account and the other part is profit and loss account. And let's show you again the other one. Here there are no 2 such parts, you know, so it's just incomes minus expenses and gives you the profit or loss. In terms of which one is tested mostly in exams, it's the income statement of the trading business, so you have to practice more on that. And income statement of a service business is also tested, but not as often as trading business. So that's it. This does the complete income statement. So you should review this together, you know, as a kind of continuation from the last lesson. All right, so bye for now.